doing, ladies and gents? Good evening to you. Microphone should be good, camera should be good, should be able to see my screen. Pleasure to have you here as always. We'll get started in about 3 minutes. I think there was an error with the time on one of the, might be the registration page. But regardless of that, maybe you're watching this on recording. If you're here live, good to see you. If you're watching the recording, we'll get it sorted. I'll show you a schedule in a moment what to expect for the next month. So before we get started, I'm looking at the screen here. So of course I've got Fed coming up tomorrow, 7 p.m. UK time, with the press conference at 7:30. Be very careful if you do decide to trade it. You know, it's sometimes it's a bit of a crapshoot. You know, up, down, left, right. I think better to let the dust settle, unless you've got a specific strategy that you deploy around that volatility, which fine, it can be dangerous. Better to let the dust settle and then see do we kind of push the upside and fail? Do we push the downside, fail? Do we push the downside and keep going? What's the news? All this type of stuff. What's the president's response to it? So much that people are waiting for, and we're at such a pivotal point in the equities at the moment and in dollar and everything. In fact, everything's like this. Today we just had a 300-point Dow candle on the last hour with all the stuff that's going on. Crude ripping, gold ripping. There's plenty of opportunity. So listen, whatever you trade, just patience. It will pay off. You've got to get into the position where you're comfortable missing multiple trades to get the one you want. And that's okay in this environment. I understand that sometimes when the opportunities are limited, when you get fewer setups, you feel like, I feel like I push a little bit harder and maybe a bit loosen the rules a bit. You definitely don't need to do it at this moment in time. Couple of great trades a week if that's your time frame. Couple of great trades a day if you're trade on the day time frame or intraday. There's opportunities there. Okay, let's get started, shall we, guys? Well, I'll give it another minute. Let's get started at 6 on the dot. The market is still very much news driven. There's a lot of headline risk out there. So at the risk of repeating myself, make sure you got hard stop in. It's too easy to put a trade in and go, I'll put a stop in a moment. That could be the moment that just rips your face off. So make sure you got the hard stop in. Yes, you might get slippage, but intraday, even though we're getting the spikes, it's going to still trade through those levels. So you're going to get filled reasonably close. And even kind of through the night when you get the 24-5 move, put the stop in. I know it's kind of 101 of trading, but at the moment, it's I don't think I've seen any environment we have such headline risk. Stuff coming through X, Donald Trump saying stuff, announcements, all sorts of things. People are bothered about the tariffs. They're bothered about the interest rate. It's stuff that everyone's focused on. And of course, the algos are responding. It's exaggerated so much more these days because the algos are programmed to respond to specific words, to specific things. And they will automatically sweep the bid or sweep the offer. That will then cascade through the other markets that are correlated because there'll be algos watching that, and then you'll get the arbitrage algos moving the stocks. Then you'll get this, and it kind of just takes a while for the dust to settle and the real move to kind of show its face, if you like. So, we'll get started now, guys. It is 6 o'clock. Okay, so today I'm going to give you a schedule of what to expect over the next month. But today I want to talk about micro decisions, macro impact. So without jumping ahead too much, I'm a firm believer that you're trading specifically, and other things as well, and we'll kind of use some analogies. The decisions, where you are in your trading as a result of the little decisions you've made along the way. Now, for some people, that stings a bit. You're like, oh gosh, does that mean that I've been making great decisions? And for some people, that's quite liberating because it means you can make better decisions moving forward. They don't have to be massive decisions; they can be small decisions, and you can kind of steer the ship towards the direction you want to go. So, just like if I sent an email out the other day, kind of giving you the link to this and stuff. And one of the things, analogies I gave is, if you make from a kind of health perspective, if you're making constantly, little small decisions like an extra bit of chocolate here or a few more, just a little bit more calories than you should, not really burning enough, that's going to show up over time. We've probably all been there. I know I have, where over time you go, whoa, hang on a second, I'm a little bit heavier than I should be. And that is a result of these micro decisions. Now, you make a big decision to shift, and then you make lots of micro decisions to kind of reduce that body fat or to reduce that weight, whatever you're doing. So that's a very simple analogy to understand. And the same is true for trading. You kind of look around and go, hey, I'm not really happy with my performance and my results. What are the decisions that I've made to get me here? I'm going to make a big decision to change, but ultimately to get to the goal, I need to make lots of small decisions. So we're going to go through that today, some tactics and all that type of stuff. And a great quote here from Ray Dalio: the quality of your life will depend on the quality of the decisions you make. Of course. Why would it not be? That makes perfect sense. All right, so helps if I have that. Let me give you the schedule, ladies and gents. So trader, the tactical trader webinar series. So I like to put different series, different webinar series, different topics and themes for each month. Last month we did the Trader 2.0, kind of leveling up and thinking about things differently. If you haven't got the recording for that, you can send an email reply to my daily email, and I'll send you that. Pepperstone will probably send you a recording as well. This month it's a tactical trader series. So we're going a little bit more operational. So of course, mindset is still in our focus. That's still got to be the cornerstone of everything we do, regardless of whether it's a tactic, a trading execution, or something on a chart. We're still, okay, does that align logically, mathematically, and more importantly, does that make sense for our brain? So today, micro decisions, major impact. Next week is doing it on the 12th because I've got a special guest on my podcast on the Tuesday, which you guys are going to love if you listen to my podcast, tradersmastermind.com if you want to listen to that. Structured scaling. So scaling in, scaling out, some of the best tactics for that, adding to positions, taking away from positions. I'm not a believer myself in that one rule fits all. Some people are, some people aren't. We'll discuss that. And on Tuesday 20th, again 6 p.m. UK time, momentum ignition edge, and then the risk block method, so chunking our trade. So it's going to be a really good jam-packed month full of tactical ideas. And as always, ladies and gentlemen, my objective is for you to come to this webinar, listen to the recording, whatever it is you're doing, and take away one or two decent nuggets that you can deploy in your trading, because that's all it takes. Sometimes it's a little course correction, a little adjustment, and that compounds over time. Just a spark in your brain, something, just think about things differently, whatever it might be, that helps. So that's my objective with these. By the way, have to put the disclaimer out there, please, if you don't understand how spread bets or CFDs work, go and check them out. Go and make sure you understand leverage and margin. If leverage works very, very nicely when it works in your favor, and it's very nasty when it doesn't. And our objective is we want to try to get more in our favor than against us. But in the real world, we have to be careful. We can manage risk to some degree, but we can't eliminate it completely. We use stops, use size, all the other stuff to reduce the risk. But ultimately, when we're trading this product, it is a sophisticated product. So please be aware if you're trading future CFDs, even if you trade futures, spread bets, whatever it might be, just understand the nature of trading. And if you don't, go and go on a demo, go and do some research before you put any of your capital at risk. I know most of you know this already. I appreciate that, but I have to say, and also if it protects one person who comes into trading, sees one of those flashy adverts and goes, ooh, and somehow stumbles then across my webinar, they might just go, hang on a second, it's not all bags of cash in Lamborghinis and all that nonsense. It's something that takes time, it takes persistence, it takes consistency, it takes risk management, all the things that need to be put in place before you kind of get to some of the goals that you want. Okay, just a quick reminder, trading for 24 years. So I've got experience. I don't have all the answers here. I'm here to share with you what I believe is a good approach. And I sometimes share multiple things and I say, hey, you know what? This is not how I look at things, but I've seen other traders get success with this. So I'll share that with you. Hey, I've seen a lot of traders try this and struggle. Maybe that's not the right thing to do, but I'll share it with you and put a little caveat. Hey, this is for this type of personality, or this is this type of trader. So I kind of come from it from that perspective. A lot here to say this is what you must do and anyone else is completely wrong, because I've seen so many traders from all walks of life with all strategies doing different things, and there's a sea of these people who are almost completely opposites who are doing well, and there's the same on the other side of the spectrum as well who are doing very, very badly. So it's finding your own path, your own journey. So I really try and share everything that I think is useful to you. It's up to you to grab it, take it, run with it, deploy it in your trading, add it to your plan, do the other stuff. And sometimes these things take time. You just need drilling into your brain like, hey, I must do this, I need to do this, I need to do this. And slowly you start to maybe a bit more focused about your pre-market checklist, your journaling, your execution, all the moving parts that we need as traders to make things work. Sometimes these things do take time to fall into place. So implement a change, stick to it, observe the results, make course corrections, and be patient. Just like you're patient with your setup, patient sitting on a winning trade, be patient with the growth and the journey. It's too easy to be impatient and go, you know what, full size clip, I'll just do this because that's going to boost my equity curve up. You don't want to do that. Very, very patient. Being very, very patient is the name of the game. And that's tough because I know the type of person you are. You want it now, 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 now. There's no reason why not. You want to push, but really grab yourself by the reins and just hold yourself back. Okay, so today we're going to talk about execution choices. Not necessarily from an always execution perspective, although we will focus on that quite a bit. How we're making these little micro decisions and how it impacts long-term performance. So I want you to remember the analogy I gave at the beginning. Like if you are making these small decisions, I'll have a little extra piece of chocolate, I'll order a dessert, I'll take the lift here, I won't take the stairs, I'll skip the gym today, or I'll just have an extra piece of bread or whatever it might be. Now listen, we know that none of those things on their own are going to make a big difference, right? If you are dialed in and you are healthy and you are eating the right amount of calories and your macros and all the stuff is on point, you know that one extra bit of chocolate isn't going to damage. But over time, if you're adding an extra 200 calories over your allowance or over your, what do they call it, burn rate, something like that, basal metabolic rate, I don't know, but 200 calories more than you need, you know that over time that adds up to pounds of fat, and you go, hang on a second, these little decisions have stacked up over time. And vice versa, if you have lost a bunch of weight, you go, hang on a second, I need to have 200 calories, 500 calories, whatever it is, less per day. Over time, making the right decisions not to have that extra and to be in a deficit will give me the results I want. So I wanted to, I think everyone can understand that. Everyone's kind of probably been through that journey at some point and understands the kind of logic behind that. And I want you to think of that when we're going through and talking through some of those things in trading, because whilst the one decision on its own has zero impact, I'm going to eat that, I'm going to take this trade, I'm not going to take this trade, I'm going to that it's the compounding that not only hardwires your brain into saying, hey, this is the type of trader I am. If you look at it, just stick with that analogy, and again, I was trying to think of different analogies, but this is the simplest one, right? If you think of like the most in shape friend you've got, right? The guy or girl who's just ripped, they're just wow, they're just really in shape, doing everything right. They identify as someone who's in shape. They identify, so they make decisions based on that identity because they've done it over time. They say, hey, I eat healthily, I treat myself now and then, I don't go crazy, I limit alcohol, all the stuff that we know, right? And the best ones have got it and they haven't sapped the fun out of life. The same with trading, right? The traders who are doing very well, the traders who are making the right decisions, but more importantly, they're identifying as a trader who makes the right decisions. They're identifying as a trader who's taking things seriously. So all those little decisions, yes, I want to get to the screens on time. Yes, I want to complete my checklist. Yes, I'm going to do my journal. All the things that matter are getting done, as opposed to the trader who doesn't do maybe that journal, skips on that. One's not going to matter, but it compounds over time, just like with the kind of health analogy that we can all imagine in our minds. So these tiny choices really stack up. And I want you to think about identifying as a trader who makes the right decision. And now listen, the difficult thing with trading, of course, is we don't know the outcome of a trade. And so this is where a lot of people struggle with trading. And we understand we're human beings. In most other arenas, the right decision gives you a result instantly. All right. If you make the correct decision, you get a result. But in trading, you can make the correct decision, but actually get a negative result if you're looking at it from an equity curve perspective or a P&L perspective. And so it's very important, and one of the tactics I'll show you later on in some of the slides is to really elongate the process before you start to do the review. And that's actually something that we'll really focus on in week 4 of this series, is really thinking like a longer term. And again, to be fair, it's not dissimilar to the health analogy, right? You can't go to the gym and have 500 calorie deficit one day, look in the mirror and go, where's that six pack? It takes time. Similarly, the other way around, if you gorged on Christmas Day, like, wow, man, I had so much food, you ain't going to see it, but if you carry on, then you see it. Same with trading. It really is the same with trading. Okay, so we want to build trust in our execution process, not just from a kind of tapping the button and getting into a trade, but also from how we review, how we come in, how we show up each day, all the stuff that you can get away with being sloppy, but not for long. So just know that the same with the analogy that I've given you 1,000 times now, you can get away with it, but not for long. And so I really want you to sort of be pushed through this to think about, okay, identifying as a trader who does it the right way. And that right way is very different from everybody else. Just like in a diet, someone might do keto, carb restriction, someone might do intermittent fastings. There's all these guys who are saying this is how to do it, and they're all getting the same result at the end of it. Same with trading, right? Some people are really, really, really kind of over the top on journaling and it works for them. Some people do make a few things, some people swing, some people scalp. You find what's right for you, but you stick to it. Okay, and what I'm going to also share with you is some frameworks and drills to help you kind of get the most out of stuff. So why these decisions matter, I guess this is repeating myself, so I won't repeat myself too much, but the timing of our entries really, really matters. And you might be like, well, duh, Mark. However, this ties in a lot with psychology, which we'll touch on in a moment. If we're hesitating, if we're jumping in too early, the psychological impact of the psychological knock-on effect, should I say, of not thinking clearly, not being on point, not getting the ducks in a row, not making sure you're doing what you say you're going to do. This is why it has an impact on trading, and we'll kind of explore that in a bit. And also the rule breaks. Right, listen, I talk about this a lot, and I'm a big advocate of this. We're human beings. We can't expect to get everything right. Like, we're going to make mistakes. You're going to come out early now and then. You're going to jump the gun now and then. You're going to make an error. You're a human. But just as long as you're making the majority of decisions in the right way, then it's going to work out. Now, that being said, this is important. You might be the type of person who it's all or nothing. And this is for you to decide. Let's use that example, someone who's on a diet, right? You might be the type of person that says, I can't have any chocolate. I can't have none of this two squares nonsense. It has to be all or nothing. Or you might be the type of person who says, you know what, I can have a couple of squares of chocolate or half a pint of beer or whatever your thing is that you perhaps shouldn't be doing, but you're trying to limit. You need to work out as a trader who you are, what your non-negotiable is. Now, you might say, hey, you know what, if now and then I'm a little bit late to a position, or now and then I kind of jump the gun a little bit, it's okay, because actually over time that works out, and one sort of slip up doesn't affect me. But if you are a type of trader who makes it, once they make a mistake, it sends them way off kilter, then you need to be very strict and say, I can't break these rules. I just can't, because I know that opens the door to me breaking more rules. Now, it's easy for me to sit there and say that, so don't, stick to your rules, never break them. That's a really simple thing to say. It doesn't help you at all. I will say that to you, if you are the type of person who starts to break rules and then goes off a tangent, you need to be very, very strict. If you're the type of person who can do the majority of things right, then fine. You keep the majority of the decisions in the right direction. The odd decision that doesn't quite make it there, you're a human being. It's up to you to decide where those decisions are. Hopefully it makes sense in a moment. And so thinking about execution, the better we are executing our edge, our plan, our strategy, then the better the results. Now, one thing to point out, you may be sitting here saying, Mark, do you know what, pal? It's not working. I just don't seem to have anything to show for what I'm doing. Most of that comes from trying so many different things and not sticking to something for a period of time. I'm not saying stick to forever, but very often we're flicking around from, I'm going to do this type of strategy, I'm going to kind of look at this in the morning, I'm doing this, and it's that kind of diluted focus. And often you make a mistake here, you move over here. And so the analogy I gave, I think last webinar, was these half-built bridges. You're trying to get to the other side and you're building half a bridge coming back, building half a bridge coming back, building half a bridge coming back. But it's that focus. And so you may say, well, I try and stick to my rules and stuff. Okay, but if we do that and you stick to your rules and you execute the way you say you're going to, then we can fix that, because we can look and do a review after a certain period of time, which I'll share with you in a moment. And you go, hey, I'm going to make a review. I've made the right decisions. Now, that might not get you the results you want. I can't stay here and say if you make the right small decisions, that's going to get the results you want, because trading is very, very different to anything else out there. In fitness, you just know if you eat less and exercise more, eventually the physics is going to work. Now, in trading, you can say, I'm going to cut my losers, run my winners. But if you're trading without edge, that's not going to work. And so there's an extra complexity there. But the important thing is you stick to one process, you stick to those micro decisions, and then you make an audit and say, I've stuck to that. It's not worked. What hasn't worked? And then you make a commercial shift of how you're going to, a commercial decision in how you're going to shift your trading. Hey, am I going to kind of hold trades a little bit longer? Am I going to hold be a little bit earlier with my entries? That type of thing. And so that's something to really think in your mind. Okay, so micro decision number one, hesitation. So I've split this up into a few micro decisions, and again, keeping in your mind that the constant good decisions or micro decisions eventually get you the results you want. Now, the caveat that I just said is that we're not guaranteeing anything here, but what we do say is, okay, if you make the right decisions for a period of time on a small basis, you get to a level at least, and you can audit where you are and say, okay, what are the big shifts, course corrections I need to make to get me aligned and make the micro decisions again to get me adjusting my strategy or tweaking the way that I enter, or those operational considerations. But you can't make those operational tweaks until you've made all the little decisions that have kind of got that data there in front of you. So hesitation is a big one, right? And the root cause of hesitation is often overthinking. It's not being clear on why you take the trade, or overthinking. So an easy fix for this, I just say the word easy, man. There's no easy thing in trading, but I think the easiest fix is to, number one, get clarity on why you're taking a trade. So we're not talking about trading plans here or setups and stuff. Done loads of that stuff before. No doubt we'll revisit that stuff. And again, I've got a momentum ignition webinar coming in week 3, which we'll talk a little bit more about some of the intricacies, get the charts up and fiddle around with those. But you need to have clarity in why you're taking the trade. The problem, this is the biggest thing I find with a lot of developing traders, is they say, oh, I didn't pull the trigger there. I missed this trade. I'm like, why did you miss it? Like, oh, I just didn't. Yeah, but have you got a rule that takes that trade? Have you got a reason to take a trade? Do you trade on the close of a bullish engulfing bar like the hourly we had today on, let's say, Nasdaq, right? That hourly bar, I think it was the 2 till 3 bar, 3 till 4, whatever it was. For example, do you look for that? Is that part of your plan that you buy that? Do you wait for a 50% retracement? What's your plan here? And they go, well, I just like to get this return. It's like, yeah, but you have to be specific. And I'm not saying completely iron out all the discretion in your trading. Fine, if you're a discretionary trader, absolutely. But you need to have you can't say I missed it and then not have a rule to get in there, because of course you're going to miss them. That's the way it is. If you're just going flying by the seat of your pants and trying to get reversals or trying to trade this, you're going to miss these days. But if you missed it because you didn't execute on a theme and a setup and a set of rules or a guidance that you had, then you need to fix it. But you can't beat yourself up and say, oh, I hesitated, when you don't have a rule that says. So you have to have clarity on why you're taking a trade. Hey, whatever the rules might be, I take a big extension to the downside on a big kind of flush move and I go long nail to stop here. I wait for a high low and I do this. I wait for an engulfing bar, I do that. I wait for a VWAP to be reclaimed and whatever it might be, right? We can go through a million permutations. But unless you have clarity on when you're going to take the trade, you can't beat yourself up for hesitating. So that's the first thing. Is really think carefully about, okay, do I know what I'm going to do? If you know what you're going to do and you hesitate, you can fix it. But you can't fix it if you don't have a rule for anything. You're like, well, I missed that. Of course you did. You're not waiting for it. There's no reason to have not missed it. So a lack of clarity. And the second reason is for hesitation generally, which is micro decision, which makes the big impact, is overthinking. So some traders fall into the trap of they have everything nailed down. They know what they're going to do. The setup comes and they go, I just want to check this. Maybe that's a little bit stretched. But gold's rallying, and they kind of look and they think that this is probably a separate topic that generally comes from that self-preservation perspective of I don't want to take a loss, and if I look at everything and make sure my ducks are in a row, then surely that's going to help more edge to the trader, which doesn't work like that, as you know. So thinking about, okay, if you are a hesitant trader, let me get the right word, they're the hesitant trader, then think, do I actually have a plan? Have I got clarity on what I'm trying to do when? And if I'm an overthinker, we've talked about this before, but limiting the amount of decisions you have to make in the heat of the moment is a good thing there. So uh, countdown entry triggers. I've got a timer as my timer. Here's my timer. I think everyone should have a timer on their desk. I don't use it specifically for this, but it's got plenty of uses. But if you are a trader who does hesitate because of overthinking, let's say you have clarity, when you see your setup, give yourself 30 seconds or whatever time frame you want to trade it. Hit your timer and go, I have to trade it within that 5 seconds, 10 seconds, 30 seconds, whatever you need. Give yourself the pressure to deploy it. And if you have to pay up and pay a worse price, you do it because you're trying to get to the point where you're not overthinking the trade. And you don't want to get into this vicious cycle, guys, because if you're kind of missing these great trades. And listen, right, the micro decision, if you're on the theme of micro decisions making the big impact over time, this is one of those where you just get worse prices. You miss the trade entirely. The structure of the RVR ruins. I know this is very much dependent on if you're trading short term, if you're trading intraday, the lower time frames, the higher time frames. I appreciate that. But even on the lower time frames here, many of you execute lower time frames and hold for higher time frame moves as well. So it's super important. But it's all amplified even more intraday. If you're a little bit late to the party because you're hesitating, the RVR, the structure of the trade just sometimes ruins massively by a massive percent. And I've kind of illustrated this before, and I've said, hey, if you're $10 late on the NASDAQ or something, your target's still going to be the same place, your stop's going to be in the same place. All of a sudden, the RVR of that goes from 3-1 to 2-1. It's a massive reduction. And so hesitation can be a really, really important thing to just completely eliminate. And you say to yourself, hey, I am not going to hesitate one bit. I don't care if the decisions, sorry, let me rephrase this. I don't care if the trade is right or wrong, or I win or I lose. I just care I'm doing the right thing at the moment in time I get to make the decision. And the right thing is this within, is my filters matched? Are my triggers matched? Am I allowed to take the trade, my risk? Then take the damn trade. If you're thinking about it too much, that's just going to be the nemesis. And again, you're constantly hesitating over time. That is never going to get you where you want to go, because you're never going to be able to look back and say, well, what do I need to adjust? You might go, my performance is not great, but where do you start? You're like, well, because I hesitated on some, I didn't on others. And so these are stopped out. These were. So that's one of the things that's really important to kind of really nail down. The next thing is the late entry. And so one of the things that I find many traders do is they just don't have the guts to take an uncomfortable trade. And I'm not saying you should step in front of freight trains. If the market is ramping through lows, then stepping in front of that's probably not a great idea. Waiting for an exhaustion candle, different. Waiting for a bottom retest, different, right? So I'm not saying this, but I'm saying that very often traders are way too late to the party. Now, this is more of an operational consideration. The markets they'll rally, they'll backfill, they'll congest, they'll do these things, they'll move in waves. They're never going to straight line. Okay, that's not true. They have done, they will do, sometimes just or but it's rare. Most of the time you get these cycles on the higher time frames, the lower time frames. And a lot of traders get to the point where they feel comfortable. Now, it's an observation that you can watch. If you watch anybody who kind of announces their trades, like someone on Twitter or someone, streaming, not necessarily streaming trades, but or someone who's in a position or at a forum or something. As soon as they feel comfortable enough to announce the fact they're long or they're short this market, that's probably the turning point. Why? Because there's a level of comfort. You think, oh, it's going really well now. Look, it's looking great. And they announce it, and that's often the point where it turns. And that's because the mass psychology is that everybody's now in, and often you get reversal. Now, not always, but why am I saying this? Because I think many traders struggle with pulling the trigger on a trade that doesn't look that good, but actually structurally it's very, very good. And so maybe you like to kind of get long for a kind of push to highs, but you want to wait. You kind of wait and you see it push back up, and then you take it. Now, fine, I'm not saying you should always go in straight away early, but if you marked off a level and you like a level and you want to get long at a level and there's no reason not to get that level, then unless you have some sort of filter in your trading rules that say the steepness of or it's a news driven move to the level, you should buy the damn level because you've structured your stop. You know exactly what the trade is. Many traders will Market comes roaring up to a level, and they go, "I was going to buy here, but oh, it's a bit quick. Oh, it's I just don't like the look of it. It looks like it's going to fall through the floor." No, no, no. Now listen, if you do that over a period of time and you find out, hey, these levels aren't holding up, then there's an adjustment to make. It's a commercial decision to say, hey, I my levels aren't good. It's just ripping through my levels. Why is that? Is it because actually they're too close to the opening print? Is it that they're not a major level? Is it that the time of day I need to adjust when I can take these at time of day? There is adjustments to make from a kind of operational perspective. That's fine. But if you're constantly second guessing, you're like, oh, I won't do the level, and then it goes, and you're like, oh, damn it, I'm going to miss it, and you chase it, it just ruins the whole structure. So these little decisions of, okay, not sticking to what you say you're going to do, mark out the level, set your limit there if you need to, or say I'm going to buy that level if this happens, if you need those, not if this happens, if you need those. Just be clear and concise, because these little, again, the micro decisions, constantly pulling orders, constantly not trading at the level you want, constantly second guessing it, is never going to help you find out what truly matters in your trading and where you can move the needle. Okay, so number 3, impulsive sizing. Oh, this one stings just saying. This would get me massively. My early 20s, what we're talking, 20, 23, 4, started 21. When I was 21, this was just me all over. Impulsive sizing, man, it was just a real nemesis for me. I would, this one looks great, man, I'm going to slam size into this. I'm going to really kind of push it. Or I never really got into the fear-based reduction talk in a moment, but maybe it's you. Maybe you go, oh, this one looks great, and you kind of push loads of size into it. And the problem is it ruins the structure of the trade, right? Because now you're slamming a size into it, it rocks back on you. You look at the unrealized and go, oh man, it's more than I expected. Now you're trading from a perspective of fear. It ruins everything. It ruins the whole structure of the trade. You can have an absolutely great read on the market. It looks absolutely beautiful. You got the level. You slam a little size in thinking to it. It's an absolutely beautiful trade. It rocks back a bit. You panic. It comes back your way. You peel it off. You end up trading. You know as well as I do. If you're a victim of this, you do it yourself. Do it to yourself. But if you do this, you know exactly what happens. You start to go, oh my God, I've got way too much size here. It's stinging, comes back a bit, you peel it off, then it goes your direction, you peel off the rest of it. All of a sudden, you've acted from a place of fear. And so, yeah, there is a time and a place to be adding to positions, and we'll talk about that actually in the scaling in and scaling out, adding to positions aggressively if that's your style. Now, two types of trader. One trader says, hey, a net or use a fixed position size. I don't know when the next trade is going to be, and they do very, very well. Other trader says, yeah, man, I really push the chips in when I see I've got pocket aces, and they've got a feel for what is pocket aces, and they risk more. And there are two types of traders out there, and they both do well. So you have to decide which type you are. If you are a trader who does have this dynamic position sizing, you can't be doing it based on emotion. There has to be some guidelines and structure, and say, hey, I'm prepared to risk 2R on this trade when I normally risk 1. And this is why, and I'm comfortable with it, and I'm at peace with it, and I've visualized it, and I'm good, and I'm happy, not just like, oh man, this thing's going to fly, bang, shove it in size. And so if we flip, so this is like a micro decision that has a real horrible impact over time, really horrible. This is the one that really gets your brain as well as your P&L. And if you've done this, like you might have a P&L that's doing all right, and you slam size into the trade, and of course that's a trade that doesn't do well. And you freeze a little bit, you maybe add some more. It's just a mess. It's a mess, man. A horrible mess. Shut up and remember these days. No good. So the other one is the fear-based size reduction. So again, these are impulsive decisions. These micro decisions you make. You might think they have no impact because they may not in that, and they might actually serve you on that one decision. But over time, is where it builds up into taking you off course. You're trying to get to that heading. You're kind of steering the ship off course with these micro decisions. Fear-based size reduction. How many times have you done this? You've seen a trade and you've gone on the fly. Yeah, I'll risk a little bit less on that. I'll risk half an hour, quarter hour, whatever it might be, and you take the trade because you want to have a little dabble. No, 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 that's really bad habit. Honestly, guys, it's a really bad habit. I know it comes from a place of risk reduction. And by the way, I believe, and listen, don't listen to me. Your results probably speak for themselves here when you do this. It never works out. If you have a structured plan that says I'm going to reduce my R unit, and by the way, when I talk about R unit, it's my risk per trade, whether that's $100, $1,000, $10,000, whatever it might be, you have a fixed R unit. I'm using that for some simplicity. If you'll suddenly go, oh, I'm going to risk half an R or a quarter R on that, and they don't really like it, then if that's happening on the fly, that's no good. If it's baked into the plan, you say, hey, this is really an okay setup. I don't mind it. It's not but I want to take it. I do believe it has positive expectancy. I do believe over time it's going to work out, but I'm going to risk half an hour. If it's a commercial decision that you've made before the moment, that's fine. But for most people, it's like, I want to take it. I don't want to. You either commit or you don't. It's like I'm putting the chip. I've already decided what my risk unit is. I either risk it or I don't. Because the trouble with this is it breeds, just like all these micro decisions. All this does is it ends up, when things are working for you, you just get gun shy all the time. Now, listen, you should already have the decision. You would have already decided, should I say, how much risk you're going to allocate to your trading. Your day risk, your trade risk, fine. You've made that decision when you're cool, you're calm. Hey, this is my risk. And so why change that in the heat of the moment unless it's part of a decision based on the price action or the pattern? You're like, this pattern is not that great, but I'll take it. I'm prepared to risk half far. But you've got to ask yourself the question, well, why would I not want to take this anyway? That's probably a separate decision to make. But changing on the fly your size, impulsive sizing. So set your size before your entry. Be disciplined, right? Just be disciplined. And by the way, you might think that these really don't have much of an impact. You're like, yeah, Mark, sometimes I take a little bit more size, sometimes a little less size. But it's a bad habit to get into unless you've got a structured way of adjusting up and down. If you do want a dynamic position size, it's very, very dangerous. Now, in the perfect world, you come into the trading day, you say, this is my trade idea for the day, or this is my trade, what I'm looking for today or week, whatever it might be. If I see this, I want to risk this on it. And it might set up slightly different to how you planned. That's life, right? You're never going to get it perfect, but your risk should be, the same throughout. Okay. Final one on these micro decisions is this exit paralysis. And this is difficult. I get it, right? I understand this is very difficult, right? I'm a trader. I'm in the trenches with you guys. I live in the real world. How do we know when to hold a trade versus when to cut? You never know for sure. People often say, Mark, how do you know when to hold? You don't. You never know, right? But you have to make the decision before and be decisive with it. And so, when the trade is, you kind of look at all the, and this is not a webinar on, some of the clues and tells perhaps from the market that suggests it's going to give you a higher time frame move. But as an example, right, if you're trying to trade short in an uptrend, you probably just want to trade an A to B mean reversion. Stretch market, fine, pings off the open, pull back to the opening print. You're not going to overstay your welcome. And that's purely because you're in an uptrend, right? If you're trading short in a downtrend, market's collapsing, pops up, just knock everything off because I'm so excited, pops up before the opening bell, rolls back over, you're probably on that and you're like, okay, I'm going to hold that for a little bit longer. So we understand the difference in nuances and subtleties of the market conditions, but we never know. We don't know the trade is going to run. We don't know the trade is going to run to target and reverse. But it's just, again, being decisive about how you do it. So just when you go into trading day, just go into the day and say, hey, I'm not going to eat loads of chocolate today, or I'm going to stick to my calorie allowance. You say this, I'm just going to this is the type of trade I'm going to run. If I get this type of trade, I'm going to have an A to B type trade, and you stick to it. And the thing is, when it gets to your target, you can't be stuck in this paralysis area where you're going, oh, should I hold it, should I close it, blah. And by the way, you normally probably pivot on one side or the other. You're normally a trader who leans towards snatching at profits. Market goes to your level, you go, it's nearly there. Maybe that's you, or you're a trader who always trying to hold stuff for bigger moves, and it's going against you. So, or it's going your direction and reversing, should I say? And so, what these micro decisions is, okay, pre-plan your exit. Again, understanding that you can never get it right all the time, but if you plan it, you say, hey, this is A to B, this extended move of the trailer, whatever it might be. Then when you audit your results, if you've made the micro decision that aligns with the plan, you can look at the results and say, hey, do you know what? I'm not very good at that. How can I solve for X? I need to solve as an entrepreneur, trader, that's what you're doing. You need to solve the problem. The problem might be, I'm just not very good at reading this. So then you dig into that rabbit hole and say, hey, the micro decision of when to hold a trade and when not to hold a trade, I'm doing it. I'm doing what I say I'm going to do. Great. That's exactly what you want. However, I need to make an adjustment in the plan of when I hold the trade and when I don't. And you can make that in a cool, calm light of day. Okay, so going to this kind of loop, right? When we you're executing trades and thinking of all those little micro decisions that you're making intraday, you want to make sure that you not only review your trades at the end of the day, but also the little decisions you make during the trade. Like I've said that, I quite like using ChatGPT for journaling, along with logging all the stuff on the blotter. I like to be able to look and kind of log things down. And very often, and listen, ChatGPT, voice memo, anything like that, video yourself, selfie video, whatever the hell it is, doesn't matter. I'll just talk to you so you have to record the thing. But often thinking about why you made the decision helps so much. You don't necessarily have to write it down, you don't have to do anything about it. But often just saying to yourself, you know what, that trade I was looking for, it came down, I took the trade in the correct size, I made the correct risk, but I felt a little bit like I was jumping the gun. And you just talk through the micro decision. I didn't jump the gun, maybe you did, whatever it is. Just talk it through. And often you can come to peace with it in your mind. And at the end of it, you can go, right, actually, you know what? There's a few things I need to watch for tomorrow. And that is that I'm not second guessing. That is that I'm not overthinking, whatever it might be for you. And so logging the micro decision behind it that's important to you. Did I hold the trade? Actually, you know what? I was looking for that 20K target, didn't quite get it, tape turned, came out of it. Is that the right thing? Yeah, you can kind of just go through it in your mind. And then you make adjustments, you make improvements over time, and you build like a scorecard. A really easy way to do it is to say, right, there's a few things that micro decisions are important for you, for me. Hey, I want to make sure I'm trading the size that I allocated, the risk unit. I'm not undersizing the position, and I'll make sure that I'm holding the positions that I believe are going to trend till the time I get trailing stop till the end of the day, whatever it might be. They might be two things. And so every decision that you make in alignment with that or that takes you away from that, you log. And so you start to realize, hang on a second, I'm shutting trades too early because when they go 2R and I'm expecting 4R, that's the point when my micro decisions start overthinking. And so now I know to analyze, hey, that's my weak spot. So when a trade gets to 2R, I walk away. You ratchet, you stop up, you walk away. Whatever you need to do to make sure that micro decision doesn't have that major impact. Okay, so some drills for you to kind of make this a bit more practical. And again, you can adjust these to suit you, right? You don't have to do exactly these things, but just hopefully these are ideas that you'll run with and you'll go, okay, you know what, this is actually effective. And listen, I understand that most people watch this and they go, that sounds good and won't do it. And I'm not expecting everyone to say, oh, Liz, the guy knows exactly what he's talking about. I'm going to do every single thing he says. No. But if there's something that resonates with you, I found that I've seen this with others, run with it quick while the momentum's there. Like you're busy, you've got other stuff going on, the markets are moving, you've got other things going on in your life. If something inspires you, whether it's here, whether it's a book, whether it's another way, whatever it might be, and you think, I'm going to try that, do it now and run with it whilst you have the momentum. So if you read these practical tips or drills or whatever I kind of talk, or whoever, or read a book, and you go, yeah, you know what, I'm going to do that, and just do some of it, just start, and just say, yeah, you know what, I'm going to do it right now. I'm going to stop everything I'm doing right now while you got momentum, because leveraging on your momentum as a human being means that when you see the results, you'll want to do more of it. But often what happens, and listen, we're humans, we've all done this, that's a really good idea, and then the next thing comes along, the next piece of content, the next day, the next trading day, the next market thing, the next thing, Fed happens, and it's just gone. And so I'm not saying these are all great, I think they are, but maybe you don't think they are. But maybe if there's one or two things you go, you know what, I like that, I'm going to do it right now. And so that applies, I think, for any kind of learning you're doing. And by the way, if you're watching this, you're doing the right thing. You're learning, trying to improve as a trader. Not only are you trading and trying to get the best out of your actual trading, you're doing the extracurricular work, the homework type stuff. Okay, so 10 trade tight loop, practical drill. Focus on just the execution. And you just say, listen, I don't care what the performance is. I don't care what the outcome of the trade is. I'm just going to trade this particular setup. And maybe it's a break of highs, maybe it's whatever it might be. You don't have to go over stuff, but you just want to rate yourself and rank yourself based on the execution. This is my size, this is my entry method, this is my exit type. That's it. I don't care about the outcome. I don't care about anything else. My focus is on pulling the trigger, exiting when I say I'm going to, doing the size I say I'm going to, all those micro decisions, do it over 10 trades and rate it. 10 out of 10, I've got everything right. Good. but more than likely there's going to be a 6 out of 10, it's a 7 out of 10. Do you know what? I didn't do this, didn't do that. And the point here is that you take the drill so that you just execute what you say you're going to do. Now, I understand there's an element of discretion with trading. We're not here to build algos, right? Wrong webinar for that. We're here to have some guidance and some structure to the way we approach the markets, but have a discretionary element that adjusts and adapts dynamically. Markets change conditions twice, almost 3 times today. We had that kind of sell-off, big rally. Now we're selling off again. If you say very strict and structured, too much, it's going to stifle you and handcuff you, and you're not going to be able to take advantage of the dynamic conditions of the market. Too loose, you end up going wild. So we need a bit of both. So I live in the real world, I get it. But we still want to have this plan of action. Like, hey, I want to train myself to make the right micro decisions every time. The outcome might not be what I want, but I want to make sure that I'm ranking myself in performance. I made the correct decision. This is a decision I said I was going to make, and I made it. Now, the outcome might not be what I like, and I might not get the P&L I like, but we're not ranking ourselves on that. And that's a separator, guys. And the people who are there looking at the P&L, worried about the trade, each trade, worried about the week, that's not going to. Now, if you're further down the line and that matters to you, then fine. But if you're still spinning your wheels, your P&L's up a bit, down a bit, you're just not getting anywhere, then maybe alter the focus, change the angle that you're looking at things and say, hey, I'm going to look at the decisions I make. I don't care about the P&L for now. That's going to be okay because I've allocated risk capital. My R unit is X. Worst case scenario, I lose my 10 trades, I lose 10R, whatever 10R means to you, and you can dial it right down so that you're comfortable. But I want to make sure that my focus is on making the correct decisions. And the correct decision isn't the winning trade. As I said, it's the right decision that over time is going to compound and hopefully give you the equity curve that you want. Okay, another one is an entry replay. So TradingView's got this. You can kind of just record your screen, just go through and practice execution. I watched a video, it was a short on YouTube of a guy who was in the Special Forces. His name was Tim Kennedy, I think it is. And I think it was a clip from the Joe Rogan podcast or something, right? And he was talking about reloading and say why we're some of the best fighters or whatever the objective was. But the point is that he said we practice reloading our rifles thousands and thousands of times. And he says that we feel the weight of the magazine. We feel the slight change in the last bullet. I mean, listen, I'm in the UK, we don't have firearms here, so I don't know what I'm talking about here. But maybe from a country that hasn't. But he said they felt that, and a change in them. All this stuff is happening in less than a second. Magazines out, magazines in. It's seamless. And he said, so in the heat of the moment, when they're in a firefight in a war zone, they're there. And this is one of the things they've trained so much. They're like, this is about to run out. I've got an idea. I can feel the magazine going light. There's a slight change in the sound or whatever it might be, indistinguishable to everyone else. Straight away he's there, bang, clip goes down, magazine comes in. The point of why I'm saying this is it really resonated with me because I thought it's just like trading. You have to practice these things. And so if you were a soldier in a special forces, would you practice it in a war zone? Like hell you would. You get shot in the face. I'm just going to practice my reloading. Well, hang on a second. You're a dead duck, right? Same in trading, right? We practice in the real market and we wonder why we lose money. So practice these things, these drills, use the replay function, visualize it, all this stuff, so that you can say, I'm hitting the market, or I'm pulling the trigger, metaphorically. We're not shooting in this business, but just that replay. So anyone at any high level is doing this time and time again. So don't just think you've got to just practice it in the market conditions. Practice it off pitch as well. It's like a football player. We're practice. And a lot of traders don't do this. And so just start. If you get momentum from this, just start and go with it for a bit. Okay, so shrink the setup. Another thing to do is one chart, strip out all the indicators, one idea, one trigger. If you really struggle to pull the trigger when you say you're going to, you struggle with these micro decisions, with sizing, with hesitation, whatever it might be, just strip everything out and say, I'm going to buy this market if we break this level, or I'm going to do something very, very clear. And you just don't. You just want decisiveness. You want one idea, one trigger, and then you add more into it. You say, well, actually, I can now look at this. I can now look at this. You want to just build it so there's no ambiguity to it. Same size, same things. Because what you're trying to do is you're trying to hardwire the neurons in your brain that says, when I see this, I pull the trigger. When I see this, I pull the trigger. I did with a developing trader a coin toss drill where toss a coin, heads you go long, tails you go short. Now I'm not recommending this because you well on a demo, you fine, you can do this on a demo. I've got to be careful what I say in terms of risk and stuff, but the idea objective of this was to just get some rhythm going with the decision. So heads you go long, tails you go short. And the idea was that he did it at a certain time of day, tossed the coin, took the trade, tossed the coin, took the trade. Doing demo. But the idea here is to really hardwire the neurons that, hey, and listen, it's not a strategy that's going to work for you. Don't under any illusions, okay? But what you're trying to do is you're trying to say, I see the trigger, in this case the coin, I go long or I go short. And so that when you map that out into the market, I see the trigger, whatever the trigger might be for you, engulfing bar, flush to lows, pull back to highs, whatever the hell it is, you don't hesitate, you pull the trigger. And you can adjust that drill to suit you, like with position sizing, etc. Okay, so summaries here of this, I feel there's a discipline layer for traders, right? You've got the consistency, which is just boring, as in the execution of micro decisions, boring. Yeah, but that's how you get the results, by making the correct decisions time and time and time and time after time. That then puts you into the results that you want over time, and you're reminding yourself. I was chatting to a trader literally before I got on this call, and he's very, very good at really being calm and optimistic about his trading. And this is the game, man. The game is to really keep reminding yourself the differences in the thinking. And then you've heard it a million times before. But if you're struggling to make the right decisions, then really kind of ponder and meditate on why you're making those decisions and think of a way to get around it. And one thing to do is to also ask yourself why you felt that way. So if you hesitated a bit, don't berate yourself too much. Just say, hey, why am I hesitating? What is it? And really working it out and being compassionate with yourself and say, listen, I am hesitating. That's not great. However, this is what I'm going to do to fix it. And let's do the 10 trade drill. Let's do the 40 trade drill, whatever it is. I have something there. It's not going to be instant, but it's kind of reminding yourself that how you think about the actions is how you get the results. So common mistakes you could catch now. Overthinking your entry, talked about that. FOMO trading, especially at the moment, market rips off. You think you've missed it. And this is the thing. I put belief in trade direction over structure. And why I added this is important, is that we can overemphasize that we believe direction is right versus the trade structure. What I mean by this, you might say, hey, I think the price is going to go to this level. I think it's going to break the lows. It's going to break the highs. You believe that so much that you're prepared to throw the structure of the trade out the window. And what I mean by the structure is the risk-reward ratio, where you put your stop. You and I both know that you might have a direction idea, but if it goes all the way up and comes back 400 ticks before it goes back in your favor, that's pointless. Our objective is to make as much as we possibly can with the least amount of risk possible. And so very often the direction doesn't matter. Of course it matters, but it's the structure of the trade. Can you put stop behind a key level? Can you kind of wait for the momentum ignition and jump on that and then put a stop behind the ignition bar? That's what you need to wait for, rather than I think it's going to hit that level. Oh, look, it's keep going. You take the trade and then where do you put the stop? So the structure of the trade is so much more important, I believe, than direction. In fact, you might feel the same. Very often you say, I know the market's going there. I've got a really good idea it's going there, but if I can't damn well position that trade, I can't find anywhere to put that trade where I like that stop. So I'm going to leave it. And in fact, one of the market wizards books, well, I think it was hedge fund market wizards actually. This stuck with me so much. The hedge fund manager trying to position, he said, I really thought this market was going to do this, but I couldn't find a decent way of doing it with a reasonable risk reward. So I didn't take it. I thought, damn it, if these guys, billions of assets under management are doing it, then we can do it. Okay, so something to consider before you kind of go into the trading day is, and this is dependent on you and your style and what your micro decisions, where you're trying to guide your micro decisions. So your sizing pre-planned. So if you are erratic with size, too much, too little, get that dialed in, because you know as well as I do, you can have a great run, but one sizing slip up, one micro decision to do maybe more size can ruin the whole week P&L of the quarter. And that can work both ways. Like, I should have made so much more on that, but I did half size. So think about that. Do you have your entry method visualized? Goes without saying where you're going to enter, where you're going to exit, and just reminding yourself, hey, listen, man, I'm going to act on my trading plan. I'm not going to feel like maybe you have got an element of discretion, but also I would suggest if you were a trader who's struggling with that and kind of flip flopping around fear and FOMO and all these things are creeping in, and you might be like, no, no, it's not me. But if you stop and think carefully, it probably is. There's a little bit of revenge in there. There's a little bit of this. Even seasoned traders, guys, even I wouldn't consider myself seasoned, nearly 24 years, but I still feel times where I go, oh, it just, and as soon as I feel that, I go, whoa, hang on a second. Is that going to influence your decision here? Is this the right trade? You're a human being. Even I listened to an interview with a hedge fund manager probably months ago now, and even he was saying, sometimes I really regret, I feel like I should chase it. And I'm thinking, what? This guy's a hedge fund manager, so you're a human being. So, appreciate that you're going to make mistakes, you're going to have feelings, but you don't want to act. You don't want to kind of place those trades based on that emotional feel. You want to do it based on the plan of action, right? And then if the plan of action turns out to not be serving you, you can adjust it. Okay, so last thing, think about this. Execution isn't exciting, right? It's just doing the right thing. It's as that example I gave you with the special forces guy Tim Kennedy, it really stuck with me, that because you're just practicing. That's one thing. Reload the magazine, reload the magazine, reload the magazine. I mean, I'm not in the military, but I can imagine if you're in a firefight, that's the last thing you want. You're there, you spraying out bullets, and all of a sudden, click, and you're like, don't be fumbling around trying to get your magazine in. That's when you get shot, right? So practicing. And if you're taking training seriously enough, that's what you should be practicing. And my guess also is that if that's a weak spot, you go out there and you do it. Now, if you look at football, Ronaldo will go out there and he do these kind of long free kicks, these crosses in, whatever it was, because it was his weak spot, or whatever his weak spot was. And so, you build this confidence through doing these hundreds of small, clean actions. And if you need to practice it, practice it. But just think like, okay, I'm going to do the right thing. I'm going to stick to the plan. I'm going to make the micro decisions that are going to add up over time to guide me in the right direction. Now, you listen. You may be in a complete state of disarray at the moment. You might be like, hey, you know what? I don't know what I'm doing with trading. It's just kind of working. It's kind of not. Things like you can really kind of compact it in. You can really dial things down and say, hey, listen, you know what? This is the ones that are important to me. Oversizing, rushing into trades, not having a structure, and make some progress and just start something out. And think about those execution leaks, the hesitation, its size, all the stuff that we talked about, and say which is the worst one for me, and then come up with a way to improve it. And be honest with yourself and say, you know what, I'm just not making the great decisions here. My sizing is too erratic. I'm chasing trades. I don't have structure. And when I get into this type of trade, I need to, be more precise with my model. How am I going to do that? Well, I've come up with some sort of scorecard. I can run a kind of rehearsal drill. I can have a checklist. All this stuff that's so easy and cheap and for us free to do. You just have to allocate a bit of time, which, okay, I appreciate as a scarce resource, one of the most valuable resources we've got. But that's what's required, so that in the heat of the moment, you're like, hey, I've done this drill. I did it 50 times over the weekend, where I saw it and I replayed it, click, replayed it, click, replayed it, click. I visualized it, put in the right sizing, click, click, click. Okay, now I see it on a Tuesday. Great. Do I take it? Of course I damn well do. Click. And just doing that and getting it right and kind of getting some momentum. So action steps for you as we wrap this one up. 10 trade challenge. If you struggle with something, pick a reason, pick a focus, an area, a micro decision you want to get right. I want to execute. I want to exit. I want to size, whatever it might be. Do 10 trades. Do 10 trades. Log yourself, rank yourself, should I say, and just say, how do I get on? Actually, you know what? I'm a mess, or now what you need to work on, or actually, it's okay. What's the next 10 I can do? Scorecard. Make some sort of scorecard. It doesn't have to be fancy. You can just have a spreadsheet. You can use my discipline tracker, free discipline tracker. You get it from Traders Mastermind. You can adjust that to make it into a scorecard. You can use pen and paper. Who cares? You just want to log stuff so you can make improvements. If you're not logging stuff, you can't make the improvements, right? And journaling. Don't have to go through loads of stuff here, but some kind of process where you are logging not only your blotter, right? Because I think that goes without saying, but just your thinking. And honestly, I really think that if you can audit your thoughts and why you're thinking what you're thinking, you can really get to the root of some of the challenges in trading. And honestly, one of the biggest battle is to understand where the bottleneck is. And unlike a traditional business where, like, I've not got enough customers, or I can't find the right staff, or have a supply chain issue or something's very obvious. With trading, sometimes it's not so obvious. Yeah, we're just not making the money. It's not working. I'm just losing money. Well, hang on a second. Why? And sometimes that takes some time to dig in and dig down and analyze. And you actually, if you can take the time to do that and you can audit and say, well, actually, you know what? I'm not really trading the trigger when I see it. I'm second guessing it. Maybe I'm taking some trades that I shouldn't take. Why am I doing that? I feel like I should be trading today. I feel like I should be making some money today, whatever it might be. And then you can dig into it and go, okay, that's the micro decision I need to improve. Let me adjust that going forward. Let me try and do 10 trades where I'm making the correct decision, and then another 10, and then you sort of tick these things off the list. Okay, let's call it leaving there, ladies and gents. If you have any questions, I'm happy to take them. If you haven't, then I will take that as a good sign. There's a couple coming in here. Let's have a look. I'll have a glance over the market while they're coming in. Dow's selling off. Nasdaq's holding up all right, actually. ES drifting off. Gold up. Strong. Crude. Did it hit 60? Not quite. Okay. Robert Parkinson. Good to see you, Robert. Or good to virtually see you anyway. Hi, Mark. Great stuff as always. Thank you. I've been profitable for 8 trading days in a row, which is a big turning point. Well done, pal. I hope you're making the right decisions rather than looking at the equity curve. But maybe you'll get to that. I now found myself hesitating a lot. And I don't even need to read anymore because you're scared of giving back the profits. I know exactly what you're going to say, Robert. I'm not even skim read it. I promise you. Let me just check that. But I'm pretty sure that's what you say. This is normal because you're protecting yourself from the previous, which is I've lost, damage, hurt, pain. Now I'm making some progress. Things are doing all right. I don't want to put a spanner in the works. I'm scared to take another trade. So I take another trade. That might mean a loss. It might mean I turn into a cycle. But let's have a look. I don't want to ruin the run. Or from another prism, I am now risking less and being more sensible. My question, therefore, is this caution good or bad? I'm trading far less, which has served me by not getting to poor trades. Good. That's the good section of it. But I'm also missing many more. Example, I hesitated in taking the DAX bath this morning and I was up 10 half of the day. This would have been a 200R trade. Robert. Okay, let's unpack this because I think this applies to many traders. Thank you for the question, sir. This is normal, especially when you've had a bad run for a long period of time and you start to make some progress. So this is normal because your mind is saying, I don't want to go back to that fear and dread and despondency and all the other words that we could think of where I was in that mire when the equity curve was at lows. Yes, I get it. But you have to say to yourself, listen, what have I done to get to this point here? And 8 days might be not a lot for many people, but for you, great. And it's a starting point. And some people who are struggling just get 8 days in a row or just get 8 days of profitability or just get some profitability. I think at that point, you go, what have I done that's good that served me here? You've analyzed that and you said, hey, do you know what? Far less. I'm not going to poor trades, but I'm missing more. That is the price you pay, Robert. I use this horrible analogy, and I can't think of a better one, but it's just a horrible analogy. If you are cutting out a tumor, you have to take out clean tissue too, or non-tumorous, I think, tissue too. Yeah, you're cutting out, same as you're taking out rust, right? You have to take out decent metal to make sure you've got everything. The same applies with trading. If you're going to eliminate your bad trades, you're going to take out some of the good trades with it. That's the nature of the beast. And so, yes, today, amplified example, you would have made 20 times as much on the trade. It is what it is, but that's the consequence and price you pay for making sure you're not taking all these trades. And actually, you probably wouldn't even get anywhere near that trade because you would have been so caught up in taking crappy trades, this one would have passed you by anyway. So it's a price you pay, and I'd rather you be on that side where you miss some of these ones and go, you know what, I missed that one, than getting on all, because nothing happens when you miss a trade. You just feel a little bit, you know what, that would have been a great trade. Didn't do anything to your P&L, versus taking poor trades does damage to your P&L. Take 10 poor trades, one good one, you're back to where you started. And so I would say, okay, be aware of what got you to where you are now, the good decisions that you've made, and that is that you've traded less, you've not got into poor trades, but also say to yourself, hey, listen, right, I'm risking X. I'm prepared to go back to lows on equity curve, right? That may well happen. I may well have a run now where I take a trade, a loser, a loser. That may well happen. I'm at peace with that because no one can take away from me the fact that I've now had a good run. I might give it away again, but I'm going to stick to my plan. These are the things that my nemesis before was it oversizing, was it chasing stuff. I'm going to make sure I do that. I don't do that, sorry. And if whatever happens, happens. And so you're at peace with the fact that, hey, I'm allocating this risk capital. I'm comfortable with this risk capital. And if you, the trouble is with trading, right? If you grab something too tight, the same with a trade, the same with your P&L. If you're holding it too tight and you don't want to risk anything, you end up risking it all. You know, the same with a trade. I want to use a tight stock because I don't want to risk more. Ping, you're out. Oh, I want to make sure that everything's lined up in a row before I take this trade. You're buying at highs. Trading doesn't reward that, and there is no such thing as de-risking it completely. And so you have to get to the point where you accept the risk and you say, yeah, you know what, I do accept the risk. Now, very quickly on this, you may well say, Robert, you know what, I feel good about my trading. I'm going to take a bit of a break. I'm going to just cement myself and just calm myself down and not overthink things and be at peace with the fact that I'm in the game of risk. I'm in the game of allocating risk capital. And I have the option or the chance of maybe giving some of that back, but I have the chance of making more. But that's why I'm in trading. I came into trading because I was prepared to risk this amount of capital for the chance to make a lot more capital. And I understood the nature of the game. I'm just piecing that up into each trade. And so I think it's a mental thing for you of maybe sitting down and thinking in your mind, hey, do you know what? It's fine. I'm okay with it. You know, I'm making progress, and progress is never linear. You're never going to have a V-shaped reversal in the equity curve. You probably will test the bottom. You probably will double bottom. You probably will have spikes and dips, but be cool with that. Be okay with that, and say, hey, I know my progress is not going to be linear. I know it might be erratic, but that's okay. I can deal with that because I know that I'm looking 6 months ahead, 1 year ahead, because that's ultimately where I'm headed. I waffled on a bit there. Maybe I did, but hopefully that makes sense, pal. James says, thanks, Mark. Thank you, James. Alex says, you mentioned protecting your edge fiercely in some of your videos. How do you recommend staying confident in your edge during extended drawdown when recency bias is screaming at you to make changes? That's a really good question, Alex. A lot of it is experience, right? You kind of say, listen, the conditions aren't right. Um, the performance isn't as good as it could be or it should be. Do you stick with it? Do you adjust? Do you adapt? I think that if you've traded through many different market regimes, this is an unusual regime, right? You kind of know what you're good at, what you're not so good at, and I think that if you're constantly pushing and pushing and pushing and they're in extended drawdown, you have to. And listen, I wish there was a perfect answer for this, pal. I wish I could just say, oh, at this point you stop trading it and shift. There isn't, because very often that will recover. I think you know yourself. You're like, hey, I feel like I'm doing the right thing. I feel like this is just a normal run of events. I feel like, yeah, I'm just not trading very, very well, or the system is just not quite aligned. I don't want to adjust it. I don't want to make too many vicious movements to it or big changes to it. Versus, clinically sitting and looking down, looking at the trades and saying, hang on a second, am I just trying to use the complete wrong system here? Has the regime shifted so much that I'm just behind the curve? And that might be a minor adjustment. And I'm okay with making minor adjustments. Like, I will make minor adjustments all the time. I'm like, you know what? You need to kind of just be a little bit more patient, or you need to be a little more aggressive, or whatever it might be, because the conditions warrant that. So you can be honest with yourself, Alex, and say, hey, do you know what? I've got an extended drawdown here. Don't need to throw the whole thing out the window yet, but is there any minor adjustments I can make? Now, you don't want to do it all the time, so you're kind of chasing your tail and constantly making adjustments all the time for the sake of it. I think you know that, but there's nothing wrong with um, being less stubborn about stuff, because you don't want to keep plowing on and plowing on and plowing on regardless. But again, is there a perfect answer of how long you keep going for? You know, only you can answer that, pal. I think you have to trust your judgment for a bit, and you have to say, maybe do this, right? Because you're saying to me, screaming at you to make changes. Maybe you do this. Maybe you say, okay, I'm going to run this for another X amount, drawdown. At that point, I'm going to make a change. I'm going to make one change. One massive change is one change. Maybe stop size, maybe stop position, stop width, should I say? Maybe holding for target, whatever it is. I'm going to look at the obvious thing and make that change. I'm going to be aware that I might have to adjust it back, but sometimes feeling proactive helps you feel more confident. And even though the change might be very minor, it might not be adjusting the edge in the system too much. But the fact that you're doing something small can give you confidence. Like, okay, I'm making these, and maybe you plan out 4 or 5 changes. You go, well, I'm running that for another period of time. I'm running that. I'm running that. At this point, I go, you know what? Hang on a second. I need to pull the plug on this. Something's not working. So I think the coming up with a plan of action helps the brain deal with it better. And you know what? Sometimes you come up with a plan of action. You go, you know what? I'm going to wait till the end of the week and I'm going to make some adjustments. Thing turns around because just life's like that sometimes, right? Okay. Gary says, thanks, Mark. Great points resizing. Thank you, Gary. Rob Ribeiro says, hi, Mark. Thanks, as usual, for opening my mind. Appreciate that, Rob. I'm glad that your mind has been opened and things have maybe add some value to your trading. That's my objective, pal. Alison says, thanks, Mark. It's a webinar. Thank you, Alison. Appreciate that. Alex again says, let me go back and see if I'll come back to you, Alex. I'll just Beth says, Beth, how you doing, Beth? Thank you so much for a great webinar. It was very helpful, especially as I had a big loss in March and I've had a setback. I've done 8 trades in the last few weeks and I'm trying to find my way back into the trading business. Sorry to hear that, Beth. I think you probably, you know what I always say if you have a big loss is analyze it. Well, first of all, let the emotion dissipate because you feel like absolute crap. And I know you've already done this today, but anyone else listening, you've got to just take stuff out of the markets. Don't trade, don't do anything because you feel awful. Let that emotion dissipate and then go back and analyze what went wrong. Generally, if it's one loss, it's a slip up of discipline, oversizing, holding a trade, something like that. Put together a structure so that it won't happen again. And then when you're ready, you come back in small size, but sticking to those rules. You know, very often that is honestly, you might not feel like it, but it's sometimes a blessing in disguise because you've been dodging the bullet for so long and you've got away with it. And then one time you don't, you go, you know what, it's going to force me to make some changes. And it might be uncomfortable. And I hate to hear anyone who has big losses, but sometimes it forces you to become more disciplined because you go, I don't want to go back there again. I don't want to be looking myself in the mirror going, man, how did I do that? How did I get myself into that situation? And sometimes it can be a real good change. And you know what? Then you get back on the right track and you make that back and you feel so good because you make it back over time. You go, you made it back in the right way and made it back by making the right changes. Nuno Paulino says, thanks, Mark, very helpful. That's a cool name. Thank you for your feedback, pal. Thomas says, thank you as always, sir. Just had a holy beep moment listening to you. No idea. I can't swear. We're Pepperstone guys. I can't swear. But I was saying, thank you, pal. No idea how it helps. But I've got no idea how it helps. But I just realized my greatest fear in trading is being afraid that I wasted 3 years of my life on something that was never going to work. Anyways, thank you. Interesting, Thomas. Sometimes you kind of go, oh, and many traders do that. They go, oh gosh, I'm putting so much energy into this and so much effort into this. I know it's a cliche, but enjoying the process. That's why I'm such a big fan of, or advocate of, like, reduce the size so you don't have the toll of emotion of financial pressure and loss and all that type of stuff. So reducing it to a comfortable size, because then you can say, you know what, if it takes me time, it takes me time. I'm just going to kind of enjoy the process, learn, do some more trades, adjust how I approach things, adjust how I deal with things, adjust how my emotions affect my decisions, and it becomes a little bit easier. But thank you for that feedback, pal. Okay, any chance you could show the micro decision slide 4 again, please? I missed this one. Yeah, let me stick it up for you if I can. This one, exit paralysis. There you go, Rob. Let's go quickly here. Alex, back to you, buddy. Alex says, you talked about good trades feeling uncomfortable. Can you give some examples of how you personally recognize good discomfort versus bad instinct to skip or modify a trade? This is a great question. How long have we got? I'll try and make it concise. I think I've done a whole thing on this, but I will revisit this because it's a great question. So Steve Ward once said this. We asked him this question: how do you recognize the voice inside? How do you distinguish between the chimp being from the chimp paradox, i.e. that one that's fear and emotion driven, versus the logical, experienced trader who says, "Hey, you know what? This is the decision I'm making." And other traders kind of frame this differently as people who use different kind of words and terminology for the voice, the name of the voice, right? But I think it's getting used to understanding the context and the language and the emotion that comes with the voice, and the instinct, the voice, right? If that voice is saying, "Oh, do you know what? I don't want to take this trade," and then it's kind of exaggerated. It's like it's fear based. It's this. It's that. Then maybe it's just that chimp and it's that little voice that you don't want to listen to, versus, do you know what? This is like a steam train to the downside here. This is feels like a little bit of an uncomfortable trade, and then you kind of frame it and go, yeah, but the risk is the risk. Okay, I've got my risk. I'm happy with that risk as I am. Take the trade. So I think you kind of learn to distinguish in your brain kind of the language that's being used, the emotion that's attached to the voice in your mind. If anyone else listens to us talking, Alex, or traders on here, I think we're mad. The voice in your mind, but we're traders. This is what happens. You have these internal thoughts. We call them a voice of thoughts, whatever it is. But it's just listening to the tonality and the kind of things they're saying. I know it sounds so hairy fairy, and I can hear myself saying it, thinking, "My God," but I think you get it. Like there's a voice that's pulsing with emotion. It's like fear, and there's an attachment to it. You're like that's trying to that's FOMO. That's revenge. That's I don't want to listen to that. I want to listen to the voice that's kind of says, "Hey, you know what? This is still within your plan. It's fine. Yes, it might not feel the easy trade, but you know this is the trade that if you get a little bit of a leg early on, it's going to put you in a good position. You can add to it. You can turn this into a nice trade." And so, long answer. Kind of learn to distinguish between the tonality of the voice of the thoughts, and you can practice it day to day, right? If you're out and you're driving and someone cuts you up, you hear the voice of, "Oh, you know what? You swear at him, shout at him, blah, 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 I'm going to overtake him." And you listen to the tonality of that voice, versus another kind of calm voice, and it's just very different. And over time, as a trader, you feel very self-aware. You start to recognize that. And I'm not saying you don't listen to the other one from time to time. You're a human being, yeah, but you can learn to decipher the difference between. Um, have I got everybody here? Yeah, slide four's on. Last two questions. What's your opinion on leverage? So many options, so it's a risk versus reward and psychology. Double-edged sword, pal, Rob. Works great when it's in your favor. It's absolutely horrible when it's going against you. If used strategically, it's a great tool. If you go in and say, "Hey, this is much I'm going to risk on the trade, in a dollar amount, pounds amount, euros amount. This is what I'm expecting or could expect from the trade. Am I comfortable risking that?" Then leverage is fine because you're just risking X amount on the trade, and maybe that is you have to do more size and maybe using leverage to your advantage. But obviously the double-edged sword, right? If you use leverage and you're not using it correctly, that loss can turn very big very, very quickly. So it's all about risk management, and you say risk reward versus psychology. Um, Nuno, yeah, I think you were commenting about the voice. You just know it's hard to describe. I think, yeah, you're very, very right. You're very, very right. Uh, it is hard to describe, and you can train yourself to get better. It's never perfect, but you can train yourself to get better. All right, guys, let's call it leaving there. Thank you for your questions. Appreciate your feedback. Appreciate all the questions. Yeah, love answering your questions. These are great questions. You're on the right track. You're asking the right questions. You're on the right track. The guy who comes in here and says, "Where's the Dow going to close today?" Out. The wrong question. But you're asking questions going to help you improve as a trader, which I like. So we're back again next week. We're on Monday next week. Keep an eye out for an email from me or from Pepperstone. And thanks to Pepperstone for being a partner in this. Without these guys, we wouldn't be able to do. Without them, we wouldn't be able to do this. So if you aren't a client, go and have a look and see if they're the right broker for you to consider. Otherwise, keep trading, keep the risk managed. Fed tomorrow, so be careful of that. I'll see you guys in a week. Thank you so much. Bye bye.